Ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Hey there,
Good
Bruce.
morning.
Yeah, man. Yeah. So here we are, Florida, dealing with our friend Debbie, who came to visit for the weekend.
Debbie is an unwelcome guest.
Absolutely. She is absolutely an unwelcome
It's
guest.
like
And
one of those relatives that show up and say, "Hey, I'd love to come see you sometime. Fantastic. Let's make plan for it." And then they tell you they're at the Burger King down the street.
yeah, there you go. Right. So yeah, that was a heck of a surprise. We thought it wasn't going to be a named storm, and then there it is, right?
Yeah.
So, and that I think that's screwing up a couple of real estate closings today, right?
So it'll not only screw up closings, but if you did not bind your insurance company is not going to bind it. And this thing came up from behind, right? Usually we know in advance that we got something that's going to affect insurance binding. But this one, was just a tropical depression, and then it immediately turned into a storm and then turned into a hurricane over the weekend. So not enough time to really do much of anything. So if you did not bind your insurance, you're going to have to wait. Now, there's other issues that come up with this as well, because let's just say that you already bound your insurance, you're all set to close, and you're supposed to close tomorrow.
Yep.
Well, the mortgage companies are going to be required to determine empirically that that house was not damaged and is in the same condition. Now, generally, that comes to the appraiser has to go back out and re-inspect the property. Now, sometimes we've been able to get away with pictures from the client or from a realtor, but that does not meet actual protocol. So, it could throw a few people off for the next week. And I expect that this rain's going to continue in Florida. So, there could be flooding issues. There could be all kinds of issues.
But I tell you, it doesn't impact you and me as much directly, but our friends up in Charleston, South Carolina are going to get hammered with this thing.
Yeah. Flights are all off. So if you're in the midst of closing on a transaction, call your mortgage company, call your insurance company, make sure that your insurance is bound, and then be prepared to have a reinspection on your home if the appraisal has already been completed. If the appraisal hasn't been completed yet, you're probably going to be okay. But listen, these are things that fall into force majeure, and we're going to be through this, and it'll be fine by this time next week.
Yeah, it's not the worst thing that could ever happen.
It's not the worst thing. It's not horrible. However, some of the Big Bend on the coast got some heck of flooding. So I'm looking forward to hearing from some of my realtors and clients down around Punta Gorda and see how they made out.
Well, up into Cedar Key, into the Panhandle. Yeah. Absolutely. So then we have another storm. We got a financial storm happening.
Holy moly. That's the one you got to pay attention to.
So are mortgage rates up? Are they down? Are they all over the place? Is the market going to crash? Bitcoin's down 16%. I mean, dude, the world's gone crazy.
All right. So first things first, if all of a sudden the Publix put an announcement on that all of the groceries are going to be 50% off, what do you think would happen to the grocery store?
Yeah, they'd get a rush. Everything.
They'd be clearing the shelves, right?
Mm-hmm.
Guess what the stock market's telling you?
Yeah, everything's a discount.
Listen, don't look at that as being a problem. And this is why I don't think most Americans truly understand how to work money. They get panicky. They worry about it. This is a buying opportunity. This is temporary. It's like I'm looking at Boeing stock because Boeing is in trouble right now. They're not going anywhere. They're not going anywhere. Nope. They're going to come back, and they're going to come back strong. And all the government buys their planes from them. So these are buying opportunities. Give your head a shake. Stop looking at the negative and look at the positive. So let's talk about mortgage rates. Look, in the last 2 to 3 weeks, we have seen nothing but mortgage rates falling. Why would they fall when the Fed hasn't done anything to the Fed rate? We know they didn't lower the rates on the 31st. They're not likely going to lower the rates on September, although we're hearing there may be an emergency Fed lowering. You know what that is? It's government propaganda. Even if the Fed dropped the Fed rate a half a point, it would not impact interest rates. And it might impact interest rates on mortgages negatively because it's going to pull from the bond market and push into equities. And I don't want them to do anything right now. Now we have a different problem on our hands because this is the perfect storm, because now we have the global markets are really concerned about about recession. So they think we could be entering into a recession. Now, here's the thing about recession that scares people as well. My opinion is I'll take a recession over inflation any day of the week. You're going to see way better interest rates if we are facing a recession. That's probably why we've been seeing interest rates drop, because the Fed did not lower Fed rates.
Right.
Why did the bond market improve? Because things are pulling out of equities. So this is your time to really look at buying a home, locking a rate in. You're going to, and today, I just want to give you an up to the minute. Okay. Bond market opened this morning. It was up by 31 points. Now, remember, we want the bonds to be high. The higher the bond yield, the lower the interest rate. So I got in this morning and bang, all I hear is, the Japanese and the Chinese market and the global markets are really concerned about a recession, and the stock market is plummeting. It's down record lows right now. Well, that's good for interest rates. But then all of a sudden, the bond market started to deteriorate. So it went from up 31. I'm looking at it right now. It's only up 6. I bet it's going to be negative by the end of the day. So we're gonna have a reversal in that. So now is the time. Don't play games. If you're closing within 30 days, it could get better, but it could get a lot worse. So Take your gains. Don't be disappointed. Don't try to play the field. If you want to roll the dice, you're rolling the dice. But right now, you're better than you were 2 weeks ago.
Awesome.
You're worse than you were on Friday. Friday was probably our best day. Now, I thought today would be a winner until the bond market had a reversal. So listen, my advice to you is don't be greedy. Pigs get fat and hogs get slaughtered. So
There you
don't
go.
want to get slaughtered in this, and things turn negative faster than they turn positive.
Yep. So, hey, we got one more topic I want to cover before we cut off for today. So, I just got this. Now, I fully understand how, or at least I believe I did understand how escrow works with insurance and taxes and all that kind of stuff. I just got a little bit of a surprise in the mail. On one of my rentals, the lender is stating that they were way underfunded on the escrow. They did an escrow analysis, raised my escrow payment by $1,000. The escrow payment went up $1,000, right? And so it's okay. It's not that big a deal. The property still cash flows, and I know I'm just making it up. It's temporary, right? But this reminded me on a lot of my customers when they buy a home, especially new construction. It seems that the lender often will underfund the escrow, right? And when they do, the new homeowner, they get used to paying $1,500 a month or whatever it is. Then they get a letter, hey, it's going to go up to $1,850, and they go nuts.
Or more.
Yeah.
Or more.
So let's go through that a little bit, because we need to prevent that, or at least be prepared for it, right? If we're a buyer.
All right. So this happens more on new construction than anything else. However, it happens when you buy a home. You have to remember, even if I buy a resale home, if that seller has been in that house for a long period of time and claimed homestead exemption, those taxes are going to be much lower. So you can go on the county and do a tax estimator, and it'll tell you approximately what your taxes are. So why don't lenders just charge you that much?
I would think they should, right?
Well, that would be smart. However, lenders are not allowed to collect in escrow more than has been determined that is necessary to pay the bill. So even though a tax estimator is an estimator, it is not factual. So lenders, if they were to collect that extra money, could get themselves compromised by collecting surpluses from clients. And that's happened to mortgage companies before.
Now,
So
by compromise, you be very clear. You mean that
fines,
they
like
will get in trouble
literally
with the
fines.
government and get fined, and it will cost them a ton of money. Right?
100%.
Yeah.
If you get found that a mortgage company is collecting excess taxes or insurance, they can get themselves into a lot of hot water like that. So escrow accounts have to be balanced by the penny, and they're highly audited and scrutinized.
Mhm.
So lenders, let's just first say new construction. So you're buying new construction. The builder was only paying $100 a year for taxes because they had 150 lots,
Right.
and
And it was
now
unimproved land.
they're all separated, right? So now we go on to a system called Smart Assets or or the county website to determine what the taxes are. But we don't want to collect what that is fully because we know we're going to have a surplus. But here's where the dilemma happens. First of all, the client needs to be crystal clear on what to expect those taxes to go to. They should never be surprised in January when that tax bill comes in. But what's going to happen is there's going to be a total kerfungle in advance. And here's what's going to happen. So let's say the taxes were $500 a year because it was based on dirt.
Mhm.
But now they're going to be $3,000 a year. So I collected insufficient amount, even though I may have collected, say, $200 a month instead of $350 a month. So I collected a surplus. Now in November, your homes are reassessed by the counties. Okay.
Mhm.
So the assessments goes out in October, November, and then they send a notification to the mortgage company that that's what the taxes are. But the taxes have been over collected in November. So the mortgage company has to refund the buyer the difference. So you get a check in the mail and you go, oh my God, my mortgage company just sent me $3,000 that I overpaid for taxes. Don't spend it.
Uh-huh.
Don't spend it. You're going to get a surprise because in January, when the mortgage company has to implement the taxes, they're going to call you and go, oh, you're $5,000 short in your escrow account.
Yep.
So they sent you a check for $3,000. It was now balanced, and now you need $5,000.
Right.
Make the $5,000 up. Don't spend the money. Then things should start being consistent.
Yeah, it does. I think new construction is probably the worst, but even no matter what, with every loan, you got to expect a little bit of adjustment. Most of the time, it's going to be up. Occasionally, it's going to be down.
Very rarely.
Usually, it's going to be up.
Well, insurance is continuing to go up, and your property taxes aren't assessed yet. You're going to reset the clock, and don't forget to file homestead exemption. If you occupy that property, I have seen way too many people forget. And I send text, I send email, and I do videos to all my clients saying, don't forget to file homestead exemption. And some of them still do.
Bruce, we talked about it a couple weeks ago, man. Somebody that I'm helping sell their house right now, it's cost them over the last 8 years, it's cost them over $10,000 for not having filed that simple thing back in 2012 when they bought the house.
Yep. Big mistake.
Big mistake, right? 10 grand is 10 grand. I don't care who you are. It's a lot of money. So,
all right. So Bruce, we're going to recap this.
Yeah.
If you had any damage, or you are already had your appraisal done on your house and you're getting ready to close, you might be up for a reinspection.
Yep.
The mortgage company may be required to do it. If you are under contract or getting ready to refinance, be very cautious on floating rates, thinking they're going to go down, because even if the Fed lowers the Fed rate, I don't expect that you're going to see a big drop in interest rates. It's just a political ploy to make you think the government's doing something for you. Mortgages are tied to the bond market. And I think even if the Fed rate does drop, I'm not going to tell you that rates are going to go up, but I've seen it happen before.
Sure.
Because it drives money into equities and away from bonds. And if since mortgages are tied to the bonds, we don't want that to happen. I just assume they leave it alone. And then You can always go to your own county website and check what your taxes are going to be based on a tax estimator. You just put in your address, whether you're homesteading it or not, whether you ported another property to it, and how much you paid for the property. Push that button and it'll give you a range of how much it's going to be.
There you go, man. There you go. Bruce, as always, great advice. I hope you get through this storm. I mean, obviously,
We still got a little bit of money left on Hometown Heroes if you're looking to buy.
Hometown Heroes. A little bit of money left, huh?
Yeah, a little bit of money. Get it now. Hey,